Ladies and gentlemen, welcome to the Gulf Oil Lubricants India Limited Q2 FY24 earnings conference call hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand over to Mr. Sabri Hazarika from Emkay Global Financial Services. Thank you, and over to you, Mr. Hazarika.
Thanks, Malcolm. Good afternoon, ladies and gentlemen. On behalf of Emkay Global, I welcome you all to this conference call of Gulf Oil Limited for Q2 FY24 earnings. We are pleased to have the senior management of Gulf Oil led by Mr. Ravi Chawla, CEO, and Mr. Manish Gangwal, CFO. So today's session would be a brief on the results by the management, and that would be followed by the question and answer round. So now I request Mr. Chawla for the opening remarks. Over to you, sir. Hello, Malcolm, can you unmute the management and go ahead? Yeah.
Hello.
Yeah, sir, we can hear you. Yeah.
Okay. Good afternoon, good day to everybody, and welcome to the Q2 call for Gulf Oil Lubricants India Limited. It's my pleasure to share with all of you that this quarter is indeed a milestone quarter for us, where we have crossed 100 crores in terms of our EBITDA for the first time in the history of the company. And we've also, have seen this quarter, which is usually a July to September quarter, is a seasonally impacted quarter for the industry due to the rains across India. And we do see a slowdown in the consumption of lubricants due to the vehicle movements, due to the monsoons, due to lower infrastructure projects. However, we have seen that for us, the team has done a very good all-round performance, and the performance in terms of volumes, the growth, the revenue, the margins, and the profitability have enabled us to achieve this milestone 100 crores EBITDA in a single quarter for the first time. Also happy to share that obviously the profits EBITDA is up 25% year on year, and we have seen also quarter on quarter sequential increase. It has also been a quarter where... Hello? We're seeing some disturbance.
There is some background voice coming. Sabri, can you be on mute?
Yeah. Sorry about that. We've also seen the core lubricants volume for the quarter come in at 34,000 KL with a growth of 6.3% over last year, which indicates to us obviously the market is growing positively, which is in the region of the 2x to the market growth, industry growth. For us, the double-digit growth we have seen across many segments that we cater to. The OEM franchisee workshop business is one where we have seen this double-digit volume growth in the quarter. There has also been a similar growth in the B2B and infrastructure segments. And as I mentioned earlier, that despite this being a seasonally subdued quarter, we have achieved this growth. Our retail channel volumes also showed improved growth, especially in the agri and motorcycle products coming back much stronger compared to the earlier quarter, and personal mobility, which has contributed 23% in this quarter versus the last quarter of 21%. Would also like to add here that we have continued to invest in our brands in terms of our various IPs like Suraksha Bandhan, both above the line, below the line, and this has been also an additional investment that we are making for the last 2 quarters and in the periods before that. So that is investment. In spite of that, the profits have been delivered. Our volumes in terms of AdBlue also remained very strong in this quarter. So in addition to the 34,000 KL we achieved in the core lubricants, we have achieved an AdBlue volume of 30,000 KL, and this has also helped us because obviously the distribution and the strength of our product and our OEM tie-ups are helping us here also. And this is really again a good growth that has happened. And our capacity increase in the satellite plants have again helped us along with the ground level activations for AdBlue. So all in all, very good expansion of this product which is getting consumed. The advertising cost, obviously, we have invested in quarter two. We'll continue to monitor our share of voice and look at our future brand investments. Also happy to share that we had a very good strategic partnership beginning with Kia for their franchisee workshops. So through our relationships with S-Oil, whose 7th range we are making in the country since a few years and distributing it for them, we got an added sort of tie-up through the S-Oil partnership that they have globally to get into the Kia workshop, where again we have made a very good start. So happy to share these developments. And clearly for us, we have seen all-round performance, and there has been also very good margin management, as Manish will talk a little more about those details. Distribution also has been a very good growth area for us, and we have seen a double-digit increase in our distribution both in urban and rural. So all in all, a very good quarter, taking forward our strategies and our marketplace activations, and overall as an organization, we've been able to deliver the 100 crores once again, which is a century, as we have a lot of association with cricket. So it is indeed a proud moment for us to have this. I'll now hand over to Manish to take you through the other things, and of course many more business highlights, both the financial and other key aspects. Over to you, Manish.
Thanks, Ravi. Good afternoon, everyone. So as Ravi mentioned, a very good quarter for us. Margins also tracked very well. We delivered 12.5% EBITDA margins as against 11.5 in the previous quarter. So there is a EBITDA margin improvement by 100 basis points. At the same time, the gross margins, you must have noticed, also improved by nearly 1.8% during Q2 over Q1. And over last year, it is more than 400 basis point improvement in the gross margins as the input cost stabilized. And we have been talking about it in our earlier calls that these are the periods when, as and when the input cost stabilizes after a certain spike in globally, these are the opportunities for improvement of margins, as we tend to retain some of the margins during the process. At the same time, all these resulted in the highest, I would say, PAT ever in a quarter, which is 73.6 crore, a growth or surge of 41% over last year same quarter. So again, a very good performance there. At the same time, all this has also resulted in significant increase in the continuous increase in cash flow generation. And if you must have noticed from the cash flow that during H1 we have generated 140 crores from operating cash during the period, and our cash on the balance sheet stands at nearly 720 crore gross cash as on 30th September. So all these are a very, very positive sign for the business and a strong business performance and financial performance. We would now like to hand over for Q&A, please. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Pritesh Chadha from Lucky Investments Managers. Please go ahead, sir.
Yes, sir. Apologies, but I missed your comment on volume. So if you could give your comment on the volume on quarter 2 and H1, both.
So our core lubricants volume for quarter 2 has been 34,000 KL and 30,000 KL of AdBlue. So overall, a 64,000 KL of volume during September quarter.
And what's the volume growth?
It is core lubricants have grown by nearly 6.3%, and obviously AdBlue has gone significantly higher, nearly 40%, 113%, YOY basis.
Okay. So which means the 64,000 KL total volume is up.
Sorry?
So what's your total aggregate volume growth, sir?
64,000 KL of total volume.
Okay.
And versus 46,500 KL of volume in the previous year September quarter.
Okay.
The lubricants, the core lubricants has grown from 34,000 to it has gone to 34,000 from the last quarter 32,000. So 6.3% growth in the core lubricants.
Okay. And your H1 total volume growth will be now standing at?
This is nearly around 4.6%.
Okay.
In core lubricants.
Okay. My other question is, sir, we were at a certain GM about 4-5 years back, and the GM number is completely different now. And I was listening to your past 2 calls. You were calling out that the margin in the business should be looked at about 13-14%. So, which of the why is the GP number still on the lower side?
So I think we have explained it in the previous calls also that there was a significant increase in the input cost over the last 24 months period, barring the September quarter, or I would say partly June quarter, up to 31st March 23, there have been significant increase in input cost, and there have been continuous price increases we had to take. We had taken almost 5 to 6 price increases in retail segment alone, and that resulted in the increase in top line significantly. We grew our top line by 37% last year, and that has resulted in the on the plain calculation, it will look lower as a GP, because while we have been able to pass on per liter cost of input to the end customer consumers as a percentage, it will look lower, because if your denominator and numerator goes up by the same amount, obviously the percentage will look lower. That's the reason primarily. On rupee terms, per liter basis, we have been able to recover the entire increase in the input cost during those price increases.
Okay. Thank you very much, sir.
Thank you.
Thank you very much. The next question is from the line of Anik Mitra from Phenomic. Please go ahead, sir.
Good afternoon, sir. Am I audible?
Yes, please.
Yeah. Sir, my first question is, what is the current trade of lube base oil and crude? And is there, what sort of impact we may see due to the current rise in the crude prices? Because last quarter you told $75 to $85 is the comfort zone for the product. So currently it is hovering above $85 for quite some time. So what sort of impact we may see going forward?
See, the base oil, which is our key raw material for lubricants, is linked to crude over a period of time. Of course, the short-term movements do not reflect in the base oil immediately. There is a lag effect of usually 1 to 2 months, depending on various categories of base oil and demand-supply situation in each category. So there are many permutation combinations here. It's not a very straightforward thing. But overall, on a longer period, if the crude sustains above a certain level, obviously the base oil will have a movement, and then the pricing action and the margin management action triggers in at our end.
Okay, sir. Sir, what is the core lube market share for Gulf Oil?
Yeah, so overall, we are in the automotive industrial segments. We are not with the white oil and transformer oils. So we have got a 7% plus market share overall. And in the private sector, we believe we are in the second position. And in certain segments like motorcycle and the diesel engine oils, we have 9% plus market share. And the others, we are around 4 to 5% market share in the segments we are in. So that's our market share in terms of various segments.
Okay. Sir, is there any addition in market share in last, let's say, 1 year?
Yeah. So we have been growing 2 to 3x the market consistently for over a decade now. In fact, more than 12, 13 years. So if you look at our market share, it is growing. And last year, in fact, our financial year, we grew 15% in our volumes in lubricants. So definitely increase in market share is there across our segments, and we continue doing that.
Okay. Sir, last quarter you told 6% plus market share in the cold lube segment.
We say 6 to 7 because it's an estimate, but it is towards that, and certain segments, as I told you, it is 9% plus. As per our data, it is around 6 to 7%. Right. I said 7% because some segments we are increasing our market share also.
Got it, sir. And sir, what is the OEM and retail contribution in your top line?
So if we talk of OEMs, there are actually various facets of OEM we deal with. We are dealing with factory fill for few OEMs where the vehicle, the first fill happens. Then there is a franchisee workshop of OEMs or dealerships where we supply, and then there is a aftermarket relationships with many OEMs. So it's very difficult to give you exact number, but the factory fill business, which is the first fill business for us, is less than 10% of our total volumes.
Yeah. So just to add, you see, we have very strong partnerships with OEMs. We have more than 35, 40 OEMs actively. In fact, we have OEM partnerships which have been with us since we started, more than 10, 12 years ago, we started adding OEMs, then it's gone on. So our OEMs market share differs based on OEM, and as Manish said, different segments. So clearly for us, factory fill is as you said, in that 10% kind of, that is there. And we have also OEM business in franchisee workshops, and we do for the aftermarket and also exports. So these associations obviously mean that we sell the products in all these areas, and it is a very good important segment for us, and that continues to grow.
Fair enough, sir. Sir, one more, please.
Sir, sorry to interrupt you, Mr. Anik Mitra. We have a few more participants.
Sure.
So
sure, I'll come back
in the queue if you.
Yeah, sure, I'll wait. Thank you.
Thank you very much. The next question is from the line of Aman Soni, who's an individual investor. Please go ahead, sir.
Hello.
Yes.
Yes, hi. Good afternoon. Am I audible?
Yes.
Okay. So I just have slightly one question only, which is quite off topic. So there's since today morning, there was just, rumor going on about, the company entering into the, defense business. So just wanted to know your comments on that. So is there anything on that?
No, I think that is the announcement by our other company, GOCL Corporation Limited. It is not with us, connected to us. Okay. That's a separate listed entity, GOCL Corporation. I think you are mixing it between the two.
Okay, all right, no issues. That's all. Thank you.
Thank you.
Thank you very much. The next question is from the line of S. Ramesh from Nirmal Bank Equities. Please go ahead, sir.
Yeah, good evening and thank you very much, and congratulations on your good result. So if you're looking at your mix of vehicles and the trajectory for growth, if you look at the next 2 years, obviously there is traction in motorcycles, perhaps in diesel vehicles, and if you see the launch of SUVs, that could also be a good growth momentum. So in terms of the next 2 years, if you see the growth in the automobile sector, how do you see that increasing your growth rate compared to what you have done this year so far? But the broader question is, on that kind of growth expectation, what happens to your business, say the market like Delhi progressively converting to EVs for the aggregator market, which has been a bit of a concern. So from 26 to 30, the aggregator market is going to switch to EVs between say 50% by 26 and 100% by 30. So how would that impact your volume growth in markets like Delhi? And if that were to happen in other states, how would you address that challenge in terms of your own growth strategy in the coming years?
Yeah, you see, recently in May, there's an organization called Klein, which does a market study of India, and in July 26th, or where we had the Klein study was done, and this actually looked at the factors that you are mentioning on the EV penetration and various categories. So based on that, client has kind of shared their analysis, which is a very detailed analysis. We can send you a copy of the report if you contact us later. The lubricant market will continue to grow 3% in volume for the next 8 to 9 years, 10 years they have predicted, even after the penetration across EV as they have estimated, which is and also that is 3% in volume CAGR plus value growth of 6%. So you see, with that, without getting into too many details, you're right, things are happening. The buses are getting EV and three-wheelers are getting into EV. Some two-wheeler and car penetration is happening. We are very focused that given our brand, our distribution, our segment-wise approach and our strengths, we will continue looking at 2 to 3 times the market growth rate in terms of our volumes. Of course, there are some segments where our market share is below 5%, where we think we can grow better. Plus, there are certain segments where certainly we are building strengths like industrial, B2B, and we have strong OEM partnerships. Automotive and what we call the retail growth, we have a very strong brand. We amongst the top 2 brands, we believe in our surveys, even if you take us as a top 3 brand, we want to build our distribution touch points, which will again go into segments, both urban and rural. So we are pretty focused on that, and we see that our growth trajectory will continue as a 2 to 3x the market growth rate. With a very strong model, it would continue for the next decade, but definitely next 3 to 4 years, we want to increase our distribution very rapidly. In fact, we want to increase distribution much faster than what we think the volume will, because more touch points means better availability, and that is our focus. So a lot of the brand investments go into continuing building our brand and also actively doing brand building at the grassroots level, both in terms of the influencers, the retailers, and of course, making sure the reach to our distributor network is optimum. And segment-wise, we look at a lot of the gaps that are there in various regions, because every region has a different strength for us. So there is ample scope for growth, and we are focused on doing that.
Thank you. So the next question is, you have announced a JV for high-power EV charging stations. So can you give us some color in terms of what is the investment, what is the revenue you can expect per charging unit or station, and how do you see that being scaled up? And over a period of time, what is the kind of share of revenue and profits you can expect to earn from that business?
Yeah, Manish will take that.
So you see, this is a company called Tyrex Transmission, and on 27th August, the board announced the acquisition of 51% shareholding in Tyrex Transmission. They are a DC fast charger manufacturing company, and the total consideration is 103 crore rupees approximately. We expect to complete this transaction within October itself. So in next 1 week, all the condition precedents are being complied with as we speak. So their company is, as you rightly said, it is into DC fast charging primarily, and they currently have more than 500 installations of such DC fast chargers across India, and that is something which is nearly, they are at 8 to 10% market share today. And it's a very interesting opportunity, because as the EVs numbers and population grows over a period of time, especially in certain segments like buses and all, they all will require fast chargers. And it is expected that the opportunity of fast chargers in India will be nearly $1 billion to $1.4 billion by 2030. So if the company Tyrex continues to maintain even their market share, you can do the math in terms of the top line and the expectation from this initiative for us. Together with this, I think we have earlier mentioned also that we have also have a product range through our investment in Indra Technology UK on AC slow chargers, as well as a software company called Electrify for the software as a service for electric chargers. So overall, we have a gamut of now complete charger-related, slow and fast chargers all in our portfolio, and definitely it should be a significant revenue contributor when the sufficient number of EVs are there on the ground. But it's an initiative which is to play the EV value chain.
Okay, thank you very much, and have a good day. Thanks.
Thank you.
Thank you very much. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Hemal, who's an individual investor. Please go ahead, sir.
Hello, sir. Thank you for the opportunity and congratulations on the very good numbers. Just I have two different set of questions. First is the basics. So if you can just give the advertising, battery and the working capital cycle, would appreciate it.
So I think we have continued our advertisement in this quarter, to maintain the share of voice, and the expenditure is similar to the previous quarters in terms of percentage, what we mentioned earlier. So this has been again a good investment into the brand building this quarter as well. As far as the
working sorry, how much is the amount? I mean, I don't have it. What is the percentage?
So roughly it is around 3.5% is what we spend. We have spent this quarter.
Okay.
And coming to your second question, working capital, I think in the last call we were at around 105 days of gross working capital. That has gone up slightly to around 110 to 112 days. And we have also obviously released the balance sheet being the half year ended. So there is some increase in the working capital because of the liquidity situation in the market and some built up in the inventory of base oil and finished goods. So overall, these are the two questions. Sorry, what was your third question?
Battery revenue.
Yeah, so the battery revenue was roughly around 20 crore for the quarter.
Okay. So my next question is more like now since you explained partially of they've invested into AC, DC batteries and we have a software. I have one suggestion and one clarification. One suggestion is would you be sharing what are your plans in the next 1 to 2 years? We got that 2030, this is the expectation, but since you have bought something substantial now and it's part of a subsidiary, what are the current sales? What do you expect for this year? What are the plans for next year? Is there anything that you can share with us that we are aware of what's happening in these businesses and how it's going to be used as in the next 1 year, 2 year with Gulf Oil, supporting in a distribution touch point or wherever it is? Do you have anything that you can share with us?
Yeah. So see, while this is a very nascent industry as of now, what we have tried to do is that we have tried to complete the portfolio around EV chargers. So it is not about battery. We are mostly into, manufacturing of chargers, both AC and DC chargers. The company Tyrex, which we are talking about and we are going to acquire, they had a turnover of around 13-14 crore last year. And they have, as I mentioned, more than 500 installations successfully running at various places and various, locations across India. It's a very promising segment because there is a lot of push from government also to, create a charging infrastructure across India, because that's one of the trigger point for EVs to have a meaningful number on the road. So overall, this is a very exciting segment. The company has a, pipeline of, discussions with many OEMs, bus OEMs. The target segments are primarily 4: bus OEMs, PSUs, retail segment where, shopping malls or offices may install fast chargers. So these are some of the prime target areas for company, and they are in touch with all the stakeholders in terms of, and we at Gulf Oil will help them because of our relationship with OEMs as well as our retail distribution channel and B2B customers and OEM links. So we will be supporting them in their growth journey. And obviously, currently the founders are, having balance 49%, and they will be, pushing it to take it to the next level with the support of Gulf Oil.
So this product generally the EBITDA margins are in the range of 20%+ plus, or they're lower than that, or how does it work?
You see, on a decent number of chargers, what we can say at this stage is that it will be EBITDA margins accretive to Gulf current business or current EBITDA margins, it will not be margin dilutive.
Okay. And when you say growth, you generally, this is like 3x, like it's large growth, 3x, 4x, 5x a yearly growth. Is that how you're imagining it, or does it go a little bit more slower than that? Like when does it meaningfully, like do you see FY26 or FY25 where you see meaningful contribution to your revenue?
I think we have already highlighted in one of the interactions that in 5 years' time, this company, Tyrex, can have a 500 crore plus business.
But yes, I did hear that on CNBC, that you did mention that.
This is a growing market with 4 segments, so that's the kind of potential with that 7, 8, 10% market share what we mentioned. But we have to see how it evolves also the market.
Plus, in addition, there is an export potential which this company can have, and there the market is, once the company can apply for all the certifications for Europe and US, then the potential is even bigger.
Oh, okay. And absolutely,
Hemal, I'm so sorry to interrupt you. We have other participants in the queue. If you could just join the queue back, please.
Absolutely.
Thank you very much. Thank you very much. The next question is from the line of Arpit Shah from Stallion Asset. Please go ahead, sir.
Hello.
Hi.
Am I audible?
Yes.
I just wanted to understand a little bit on AdBlue volumes. So what's our current market share in this market, and what percentage of our sales comes from traded products in AdBlue volumes? Hello.
So, can you see now, Mr. Shah, this is a product which, obviously we are manufacturing and getting manufactured in our own plants and satellite plants. There is a number of manufacturers of this. We believe that kind of product that we have put in the market would take us definitely in the top 5 kind of, top 3, top 5 kind of organized players. But data again is getting organized in this sector. And definitely for us, we are looking at the quality product, and we wanted to use our distribution and customer base. So it's a product which is used for the BS6 vehicles and some BS4 vehicles based on the diesel consumption. And whatever diesel consumption is happening in these vehicles, roughly about 4% is the consumption if everybody is using AdBlue. That will happen. So it's a very good growth market. It's I would say for us it's an add-on supplementary product, and we can leverage our brand distribution. And we are amongst the top players in terms of this product in India today.
Okay. So does it by any chance cannibalize the core volumes?
No, it's a different product completely. It's an add-on product for the diesel engines.
Got it. And what kind of margin do you make on this product?
Yeah, we mentioned to you it's a single-digit margin.
The single-digit EBITDA margin, right?
Yes.
And on the core volume, what kind of volume do you envisage, let's say for the next 2 or 3 years? Right now, we can scale at around 6% volumes for this product.
In core lubricants?
Yes.
So we have said if the market is growing at 3%, we would definitely look at a 2 to 3x of that in terms of our volumes.
And any plans to bring margins of AdBlue product to the core loop products? The margins back to that kind of.
We have to be competitive, right? So you have to maintain competitiveness in this product, and it's also a consumable product. It gets consumed.
Okay.
It needs to have very, very strong distribution. It's like it's a very high grade of water with automotive urea, and of course has certain quality parameters. So it is like it has to be available at the spot at a convenient location, and transportation needs to be minimized. Otherwise, you'll be paying a lot of freight cost.
So any way that you can expand margin in this product?
Well, we have to be competitive. So it's obvious that it's definitely a supplementary product, as I keep saying.
Got it. Thank you so much.
Thank you.
Thank you very much. The next question is from the line of Aditya Sen from Robo Capital. Please go ahead, sir.
Hi, thank you for the opportunity and congratulations on good set of numbers. Can you please share the realization of both AdBlue and core lube in this quarter?
So usually we don't share per liter realization. You have the revenue on a total basis and the volumes we have shared already.
Okay, yeah, we have that. Okay.
Yeah.
So, and also, if you can share the capacity utilization at company level that we have.
So I think in this quarter, again, we are close to 95% to 100% utilization in both the plants. And in fact, Chennai plant is also touching near 100% capacity utilization. But this is on two-shift basis. Yeah. So we can always run a third shift and increase the production.
All right, great.
Thank you. That was impressive.
Thank you.
Thank you very much. The next question is from the line of Anik Mitra from Phenomic. Please go ahead, sir.
Yeah. Sir, my question is, what is the two-wheelers and four-wheelers ratio in your top line?
So the product mix as it goes, 23% is personal mobility, that is motorcycle and car put together. In this quarter, it varies between 21 to 23% depending on the quarter and the demand in other segments. So overall, this quarter has been 23%.
So 23% is two-wheelers and passenger vehicles together?
Yes.
Okay. Okay. And what is the share of commercial vehicles?
That's in this quarter is again 38%, but nearly it is again between 38 to 41% or 42% depending on quarter to quarter, and depending on whether there is a seasonal rain or because in a monsoon quarter usually the diesel engine oil consumption will go down, like it has happened in this quarter also in September quarter. So again, roughly 38 to 42% is the range there, and personal mobility, as I mentioned, between 20 to 23%.
Fair enough, sir. Sir, this ACE Oil, that is the Kia India dealer network, what you referred about. So when we can see some revenue addition from this particular segment, or let's say this particular collaboration, yeah.
You see, with the OEMs, you have to do a lot of work on the product technology, and you have to make sure your product is accepted in the vehicle. So these are years and years of efforts which happens, and then the franchisee workshops which actually happens. We are now one of the suppliers there, and we have already started selling this last 3 months. So already there is a volume that we are getting from this. We would at this stage not like to reveal because it's a business building process, but what we can assure you is that we have been very successful with all OEMs. As I mentioned to you, 35-40 OEMs, and we have a good share with them. So we will continue working in that direction. The sales have already started coming in.
Okay. Sir, is it for Kia India or you have?
It is for Kia India in their service workshops, what we call franchisee workshops, where the vehicle goes for servicing after you buy the vehicle from the OEM.
Got it. Thank you. That was from my side. Thank you.
Thank you so much.
Thank you very much. The next question is from the line of Isha Mulchandani, who's an individual investor. Please go ahead.
Hello, thanks for the opportunity. Sir, I would like to know what has been the major components for the other expenses increases in this quarter.
See, one of the primary reason is freight, because the AdBlue volumes, so as we increase the AdBlue volumes, the freight goes up. So that's one of the reason. Key reason, I would say. And we have mentioned in one of the earlier questions that advertisement cost has been also higher in this quarter, like the quarter one. So these two are primary reasons. Plus, if you do more OEM sales, there is OEM loyalty link. So that I would say three components primarily.
Okay, thank you. And how has been the export as an overall percentage of the turnover in this quarter? Has it changed? What is the range of that?
So typically, this is in the range of 5-7% for us. So it is in that range only.
Okay. Okay. And the last thing on the press release, I think you have mentioned something that the margins have been improved on account of the better product mix. So can you please elaborate a bit more on that? What has been the mix that has driven these margins and in specific segments or something?
Yeah. So it's across segments. So what we do is in each of the segments, whether it is retail or others, there are products where range selling comes in, where synthetic grades come in, and definitely we see that if you look at even the segments, personal mobility, as Manish mentioned, that has gone up to 23%. So within the category mix and within each segment, we have various products which are giving us better margin. So it's a complete exercise which is our focus, and that's one way to manage the margin. So clearly for us, that's the focus.
Okay, sir. Thank you so much.
Thank you very much. A gentle reminder again to all the participants, you may press star and 1 to ask a question. The next question is from the line of Hemal, who's an individual investor. Please go ahead, sir.
Thank you again. Sorry, I just had one clarification. So let me ask you reverse. Like when you say that the new subsidiary JV that you have done, is there an expectation by when you reach 100 crore revenue in that subsidiary, like in next year, 2 years? Is there a viewpoint that you have on it?
You see, Hemal, this is too early days in an industry which is also a nascent industry. We have to really see how is the penetration, how is the government spending on this sector. But as we mentioned, the target is eventually to retain or grow the 8 to 10% market share in this industry. It's very difficult to give milestones at this moment as to when we can achieve 100 crore and then again 200 crore.
Okay. So then, and do we see ourselves doing more such acquisitions in the future as part of our EV strategy?
So we keep evaluating the space in the EV segment for sure, and we have already done 3 investments in this segment, and obviously we keep looking at investments into, as we see that there will be a point when the vehicle park of EVs will be reasonable enough to cater to that segment because of our 3 strengths, as we mentioned: brand, our distribution, and relationship with OEMs and B2B customers. So we are definitely looking at, continue to look at many opportunities in this space. As soon as we have something concrete, we will definitely share.
But you don't think we have overpaid for this acquisition, have we? Because it's 14 crore sales and 200 crore. I mean, I'm doing some math here. It's like 14, 15 times sales. So is that expensive? Is that like not expensive relative to what we've seen in the market otherwise?
So this is a combination of primary and secondary. I think we have mentioned that also earlier in our calls, that there is a large primary component out of this consideration, and the valuation to that extent is what we are talking is post-money, whereas the pre-money valuation is lower. And we would not like to comment specifically on whether it was expensive or not, because we have done our due diligence and we believe that that it is a good fit to our future plans.
Okay, thank you, sir. Thank you for the answer.
Thank you very much. The next question is from S. Ramesh from Nirmal Bang Equities. Please go ahead, sir.
Yeah, thank you once again. So if you look at the auto sector, there is some inventory build-up, particularly with Maruti, because they have been ramping up production. So is there a possibility of a slowdown, say, in the next couple of quarters as the automobile industry adjusts itself to clearing out the inventory? So how do you see that going forward? And secondly, in terms of sustainability and, progress towards Scope 1, Scope 2 emissions, how are you seeing the progress over the next 1 or 2 years?
See, for a lubricant industry player like us, factory fill business, which is directly linked to the new vehicle sale, whether it is car or trucks or two-wheelers, as I mentioned in one of the previous questions, that our factory fill exposure is less than 10% of our total volume, and that too primarily with 1 or 2 OEMs. And hence, it is not a direct impact of inventory corrections by the vehicle OEMs, etc., on our business. Our business is more linked to the vehicle running on the ground, the activity happening, the GDP moving up, and if there is more running of the vehicle, more cement and steel being carried, manufacturing activity happening, infrastructure activity happening, that's where lubricant is consumed on a replacement basis. So we are not impacted on a monthly sale of vehicles, etc., on a direct basis to that extent.
Yeah, just to add, there may be a percentage, 2% kind of impact if one of the OEMs or some of the OEMs cut down. And most of it, as Manish rightly said, is to do with activity use of vehicles, even movement of people. The more people move on bikes, on cars, more tractors are used. The activity, both in terms of the industry activity, the transportation activity, even transportation of people, the trucks, of goods, all this is where large part of the replacement lubricants come to play. And of course, industries who we supply.
And in fact, the quarter 3 and quarter 4 are usually better quarters for the industry because after the monsoon season and festival season starts, and there is a lot of movement linked to those also. So usually the December quarters and the March quarters, being the year-end quarter, are the good quarters for the company.
And on your efforts in the area of sustainability and scope 1, scope 2 emissions, anything you can share?
Yeah. So we are working on that in terms of solar energy, all our plants. We are working on reducing those. So obviously we will come out with, we are part of listed companies. We are reporting globally also. We are active in this area. So surely these are areas of focus for us.
And you can refer to our BRSR report, which we have published as a part of annual report, where you will get a lot of insight into what we have done and what we are pursuing further.
So is there any additional cost involved which will, impact your margins as you go along in terms of your efforts in sustainability?
We do not foresee as of now any such thing.
Okay, thank you very much.
Thank you.
Thank you very much. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. The next question is from the line of Nitin from Phillip Capital. Please go ahead, sir.
Hi, sir. Good evening. Thanks for the opportunity. Sir, my question is related to the acquisition of Tyrex. So I just want to understand that how does the business of Tyrex compare with the business of Indra Renewable and Electricity? So if you can help us understand the 3 business models and also the kind of basically similarity or synergy, if there is any, which exists between these 3 businesses. That is the first question. And secondly, if you can just as a reminder summarize for us that what we have sort of paid for Indra Renewable and Electricity in the past and what their revenues are on an annual basis, and similarly for Tyrex as well.
Yeah. So Nitin, I'll try to explain. So Indra Renewables is making car chargers, which are slow chargers. They make smart chargers. They make, in Europe they are supplying, and they are into slow car chargers, and definitely they are doing well. We've also tested the charger in India to see how we can bring it in. So that's the slow car charger in which we are working on based on their inputs. Electricity, as you know, is a software as a service company. They make software for all kinds of connectivities on EVs. They work with car OEMs, with charging infrastructure. So they are a software as a service company. All kinds of software involved in EV. They are progressing on that. And Tyrex is a DC charger manufacturer, which is now specialized in DC chargers, which go into fast charging. So these are 3 of the businesses which are there. I think Manish explained on the segments for Tyrex, etc. So these are the 3, and there is interconnectivity. There's also Gulf having our brand distribution and our customer bases. So we always want to bring this play together, but importantly, what their strengths are, we want to develop and grow with that and those segments. So work is on there. And I think Manish explained that we have invested 51% in Tyrex, which is at 103 crores, if I remember the figure. And in the case of Indra, both our parent company, Gulfal International, and we have invested. So Manish can probably share the figures. And we also, I think, consolidated. We have not consolidated, but we have given some figures on that. And we also made an investment of 26% stake in Electricity. Yeah, Manish can probably add anything to be added.
Yeah. So basically for Indra, we invested roughly around 30 crore rupees. And you will recall in December 22, they had raised further rounds, and that's where we had an OCI based on the next rounds of valuation of around 35-37 crores. So that's the investment of around 30 crore in Indra on original basis. Another 15 crore odd we invested in Electrify, which is a Tech Prospect. The name of the company is Tech Prospect with Electrify brand. So, and this 103 crore. So roughly 150 crore so far we have invested in EV related areas from India balance sheet. As far as stakes are concerned, I think 51% in Tyrex roughly 7.5% on diluted basis in Indra Technology, and 26% in Electrify is our current stake. So that's where we are.
Great, sir. That's very good. So in revenue terms, like you mentioned, the revenue for Tyrex at about 13-14 crores. That's annually, right? So can we have a similar figure for Indra and Electricity as well?
So you see, Indra being a minority stake, we will not be able to give you the revenue numbers. We can share that they are doing very well in terms of the UK market growth. They have more than 20,000 installations of chargers already across UK and Europe market. And Electrify, we consolidate the numbers, so you can, so 5 crore was roughly their last year gross turnover was last year 5 year, FY23. And current year 6 months is around 2 crore or 2.5 crore. So that's where they are. Usually for Electrify, the H2 is better than H1 because of a lot of orders fructifying in that period.
Understood. That's very helpful. So, sir, is it like, I mean, can we conclude that, like, given that we have now invested in the slow charger business as well as the fast charger and also the software service provider, so this in a way sort of completes the spectrum of investments in the EV charging technology, or we would be looking at more investments going ahead?
So as far as the charger manufacturing is concerned, I think we have the full slate now, and we have to start, putting our efforts on localizing some of the things, and also, bringing Indra chargers to India for Indian market, which we had earlier spoken about. So these are going to be our efforts, but beyond chargers, there are many opportunities in EV, including like battery swapping, etc., which we keep evaluating. But if there is something concrete, definitely we will come back and share.
Sure, sir. Thank you so much. That should be all from my end. Have a good day.
Thank you.
Thank you very much. The next question is from the line of Nirav Savai from Abacus. Please go ahead.
Yes, sir. Thanks for the opportunity. So just wanted some more understanding on this Tyrex transmission now. We said that we are aspiring to reach a revenue of almost about 500 crores potentially in next 4 to 5 years. So what's the revenue model, and how do we see this scaling up, and what is the government subsidy part in this part of the business?
This is an outright sale of chargers. So this is this is not a CPO sort of a business where it is linked to utilization, etc. What they do is they supply to these government PSUs or to bus OEMs or to retail and other customers. So they are into make and sell type of a model. So it's not actually a sort of linked to utilization or anything. So it's a more buy and sell, or rather make and sell.
Okay, so we are saying we have about 500 charging stations as of now in India. So that's what we have sold it, or we operate those charging stations?
No, it's all sold.
All sold.
So Tyrex makes the charger and sells it, and they obviously provide some maintenance and all for the quality and all. And this is outright sales, so there is no. Plus, the budgets that we are seeing allocated across various. If you take the petrol stations, and of course the other things are there. So as it develops, obviously this will help to position products more in the growing segments.
Right. So this is.
And we mentioned India, and we have also potential overseas once we get the certifications.
So it's largely dependent on government plans, is in terms of expansion of EV and all.
It depends on how the infrastructure for charging network is going to develop. There are 4 segments. One is the PSUs, as Manish mentioned, electricity boards, petrol stations. Then there is the retail. If you take fast charging that is happening, the buses that are selling in the depots that requires chargers, and then you have even infrastructure where you require fast charging, whether it is residential or it is other locations. So that is the 4 segments clearly identified.
Just to give you further idea, for example, if we take the bus segment, electric bus segment, every 3 to 4 buses will require one such fast charger. If they want to operate during certain number of hours during the day, this is, and government recently came out with some 15,000 new e-buses to be, awarded as a contract through various STUs and all. So the potential is going to be significant in certain categories in terms of demand for such fast chargers.
So is it currently are there competition from India or it's chargers which are imported to India?
So there are few players in India as well.
Okay, so these are all government tenders and we will be bidding and
yeah, as we said, Tyrex is targeting 8 to 10% market share, which they already have in terms of the current bids, close to that.
Plus also many of the government PSU national oil companies also are trying to put chargers as their fuel stations. So government has mandated that also. So in addition to these bus OEMs, there will be public charging through these fuel stations, etc. So there is a lot of activity going around that as well.
Right. Got it, sir. That's it from us.
Thank you. Thank you, Nirav ji.
Thank you very much. As there are no further questions from the participant, I now hand the conference over to the management for the closing comments.
Thank you. Quarter two has been a good quarter for us, and we have grown, 2x the industry growth at 6.3%. And also H1 we have seen positive growth, well in line with what our plans were. And we've also seen quarter two where there's been good stability in costs and pricing. That has also helped, and our mix has helped for sequential improvement in gross margins. And definitely we are working towards a guided band as we continue to make investments in our brand. We are confident that we'll continue this market-leading growth and, of course, gaining market share with continuous focus on margin management in view of the recent and ongoing, I would say, a lot of developments, but definitely geopolitical developments. So while we invest in the brand, we want to continue to be in this 12 to 14% margin level. And definitely the brand investments will help us in our retail segment to grow, where we are focusing a lot on our distribution, both in urban and rural, also in the car stops and bike stops, which are garages, independent workshops. OEM, where we have been doing very well, we continue to having a strength and growing with the OEM in various facets. As we know, there is a lot of new vehicles, which go into the warranty period, the extended warranty period, so right across segments. And we are present in a lot of OEMs right across the automotive, whether they are two-wheeler OEMs, three-wheeler OEMs, tractor, commercial vehicle, car OEMs. AdBlue will continue to be an area which is giving us supplementary benefits. And we will focus on continuing our market growth in the stronger product segments where we are there, and also where we see potential, where we have less than 5% market share, like industrial passenger cars. Also, I would like to add here in the outlook that there are a series of new products which both deliver value and high quality and moving towards premium products. So both these are there, and we have introduced some of these, and some of them are going to be introduced in the quarter that is coming ahead. So the focus is to obviously grow market share with the help of these also. So I think all in all, we are as a team focused on that, and we look forward to having you with us in the next call. And thank you for your support. Good evening.
Thank you very much. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.